Ladies and gentlemen, it is Tyler here from Tyler Trading Tips. I hope you've had a fantastically profitable trading week. Welcome to a new series that I'll be doing every Saturday now, explaining Forex setups you missed serious money on this week. It will be an educational series where you can learn and gain Forex tips in regards to my trading style and strategy. And this week we're going to be going over 3 pairs which you have definitely probably missed money on, and that's EURNZD, Cable NZD and USDCAD. I'll obviously explain why these were trading setups to begin with, the trade management involved in that, the targets and the risk as well. So be sure to subscribe. Leave any comments as well for any future videos and Forex setups you've definitely missed money on this week. Let's crack on and start with EURNZD. Now, EURNZD was an interesting one this week because I did do a Forex live trading vlog, which you can check out on my playlist, and I'll also link as a card in the top right hand side of the video as well for you to check out. Now, why was this a trading setup? Now, first of all, we're at a whole institutional level of 1.68 as indicated in the support level here on the green line, and then we had a lower time frame entry from the 15, so I go down a lot lower to get my tight stop losses and then ride the trend. So we had the institutional level, the lower time frame setup. Now, in terms of the 1 hour as well, we also had higher directional bias being bullish. So when I'm trading, I'm also making sure I'm trading with the trend, because you're not going to make gains counter trending. You're actually increasing your chances of losing trades by doing so. So as we can see here, the 1 hour chart making new highs, then lower highs, and then carry on up to making higher highs. And then we was able to grab a nice piece out of that pie just there. So the 1 hour in an uptrend, the 4 hour as well, we can see from roughly about the start of May, we've been going in nothing but an uptrend, and it's now made new highs, breaking structure over here. So that just indicates further that we do have bullish momentum, the direction of the bullish side and buyers in the market. So again, that's why we entered this and made roughly, I believe, 16 risk to reward. It was an 8 pip stop loss. I used Fibonacci targets to gain my overall maximum reach. So even though a lot of traders in the retail side want to grab every single pip, I don't. I use systematic targets. So my target for this trade was the 400% Fibonacci, which you can see absolutely smashed. And then we can see, based on the statistics, an 8 pip stop loss, 140 pip gain. We made 17 risk to reward in a matter of a few days. The trade began on the 18th at 7:45, finished on the 19th at 7 in the morning. And what's funny as well, you'll be able to see in the live Forex trade that I wasn't able to record the ending because overnight it just shot up and rallied and hit target. So that's always a blessing. Making money in your sleep, ladies and gents. That's always the best way. So that's the first one there that you probably missed money on. So definitely take notes of why I did this. My trade management was 1-to-1. So as soon as it went 8 pips in profit, I risk freed. You can then see the pullback, which did not take me out and then rallied on. So that's the first one there. We'll now move on to Cable NZD. This was another outstanding trade that you may have missed money on this week, and it had a Forex trading setup that you could have profited on. So the reason why, first of all, we're at an institutional level of 1.9620. Note that, 1.9620 level, institutional level. Okay, now we had a lower time frame setup here, and that's the reason why. So we had the institutional level, the lower time frame setup, which rejected. I then set Fibonacci targets from here. Now again, the Fibonacci target I was aiming for was the 400%, and we can see without fail it carried on to smash that target. Now you can see I used a 12 pip stop loss here to aim for a 113 pip trade, and you can see the risk to reward, 9.4 risk to reward. So just from these 2 trades, if you had only traded these 2 pairs all week, you would have been over 20 risk to reward. Outstanding profit, outstanding returns that you could have made. And again, go into the 1 hour chart to get that higher directional bias. You can see the chart is broken structure to make new highs, lower high in which we entered on, and then went up to make new highs. So you're following that 1 hour bullish trend, and that is also backed up with the 4 hour confluence as well. So you can see the 4 hour breaking structure, making new highs, making lower highs, and then making higher highs again. So the 1 hour, the 4 hour bullish. Then you get onto the 15-minute, you're only looking for buy setups. It pulls back into the institutional level with a lower time frame setup to get back in. That is exactly the reason why you're only getting a 12 pip stop loss and you're making 9 risk to reward. And again, with this trade, 1-to-1 going risk free. Soon as it's 1-to-1, that's it. Protect your capital, protect your account. And then as you can see, there was no pullback. It just carried on going. Sometimes you get a pullback, sometimes you don't. And it's always the ones that don't give you a pullback, you know you're doing something right. So there is the perfect example of a trade, textbook grade A, you could have taken this week for cable NZD. Now the final trade as well that you've most likely missed money on was again a sell that happened on a Friday for USDCAD. Now, I know a lot of retail traders assume you can't make money on a Friday. Well, I'm here to tell you, you are wrong. You are wrong. Now, it hit the institutional level of 1.2080. It just missed the whole level, 1.21. So we're not going to include that, but I will mark it. 1.21 was missed. But that means the institutional level of 2080 is still valid. Now, there was, again, a lower time frame entry from the 15-minute to get in on this trade. You then mark up your Fibonacci's here again, in which I did so, and you can see from here this was the only trade that literally missed 400% Fibonacci by a matter of pips. And I'm saying a matter of pips because it was literally 2 pips, as we can see just there, was missed. But you did get an exit criteria, so it did this, went back up, fell back down here, and then you'll be able to see lower time frame wise there was an exit criteria. So even if you didn't get out in the first initial rally, you got out in the second rally, you're still, like I say, making 12 risk to reward, and that's only from 60 pips. 12 risk to reward from 60 pips using a 5 pip stop loss, because the lower time frame entry allows me to do that tight stop loss, because if it goes any higher than 5 pips, this setup is not valid no more. And that's the reason. So, you know, you don't really need to do 30-40 pip stop losses, because you're actually not understanding how the fractal nature of the market is. If you can enter on lower time frames with tight stop losses, you can make insanic profit from a day trade. This happened in one day. So the entry came on a Friday, like I said, at 9 o'clock in the morning, and by 12 o'clock in the afternoon, you've made 12R. It's outstanding. I can't describe that enough. 30 risk to reward plus in 3 trades that occurred this week. That is some serious money you may have missed out on just because of the way you may be trading right now. So definitely take note of how I'm doing my targets, how I'm going risk free 1-to-1, how I'm able to do tight stop losses, how I'm only aiming for institutional levels. These are notes you should be taking, because absolutely they're giving that risk to reward that you see every time I make a Forex live chart trade on an MT4 account. So finally, again, just looking at the higher time frame bias for USDCAD, we can see downtrend. We can see the 1 hour made a new low, made a lower high. Now we took a piece of it coming down to hopefully now continue to make a lower low. So that's the 1 hour bias in a bearish market. Again, the 4 hour, I don't really need to do much talking on the 4 hour, because since the start of the month we've been doing nothing but free fall. The 1 and the 4 hour indicates to me as a trader, if you're trading as a swing trade or a day trade, only look for sells. Only look for sells. If you're buying the market, you're counter trending, probability is against you, and that's fact of life, unfortunately. So that just shows you there 3 trades that all had higher directional bias, all had institutional level rejection, lower time frame setups, and it would have made you over 30 risk to reward in 5 days. Now definitely take notes. If you have liked these Forex trading setups that you may have missed money on, definitely give the video a thumbs up. Give me a comment about any questions you may have in relation to Forex, my trading setups, strategies and trade management. I'll be more than openly happy to respond to you guys. And again, be sure to subscribe for next week's one on Saturday. That will be coming, and I'll see you ladies and gentlemen then. But this is Tyler from Tyler Trading Tips signing out.